Thank you all for joining this final panel session where we'll be discussing the digital asset and wealth management part of the fintech ecosystem. Naturally, we save the best for last, and representing this industry would be four key panelists. We've got Odunayo, Eweniyi, who's co-founder and CEO of PiggyVest, Razaq Ahmed, co-founder and CEO CowryWise, Tosin, Osibodu, the CEO of Chaka, and Ibitunde Balogun, Group Executive Commercial Tangerine Group. Over the course of today, we've heard from various parties that are part of this ecosystem, starting from the regulators and infrastructure providers, be it the NGX or the SEC, who have shared their perspectives around markets, investor protection, and their paternalistic view of things. We've spoken to the VCs that have funded many of the entities that we have on here, as well as others that we have seen in prior sessions. We've spoken to the traditional banks from the perspective of their digital business arms, and these arms are trying to compete with the fintech entities that we have also spoken to, whilst also trying to collaborate. Outside of that, we've spoken to mobile money providers, and those mobile money providers have been one of the key parts of ensuring that the consumer understands digital and payments from a digital perspective. Before this session, we spoke to lenders and neobanks, and these lenders and neobanks have also buttressed on that wave to support the ecosystem. Digital payments, last but not least, is a very key reason, and perhaps the rails for many of this. And with the digital payment industry maturing, even though it's still nascent, we've been able to have many secondary uses of that. People are able to transact in a very, very quick and swift manner, and this has supported the growth of the digital asset and wealth management businesses. So perhaps we jump straight into the session now, and I'll raise my first question with Odunayo of PiggyVest. PiggyVest is the first savings and investment app in West Africa and was launched under piggybank.ng 5 years ago. Can you talk us through the journey and evolution of your business from a commercial, as well as importantly from a regulatory perspective? I think the second part of that question would be, what does the future hold, and what new asset wealth problems will PiggyVest be looking to solve for as we move forward? Thank you.
Thank you. Hi, everyone. My name is Odunayo. I'm co-founder and CEO of PiggyVest. And as was mentioned, we did launch PiggyVest 5 odd years ago. And why did we launch it? It was essentially in answer to a gap that we'd observed, as how young people interact with the financial services ecosystem. Ideally, you hear a lot about people being excluded from the system, but there's people who we also found out were within the banking ecosystem or within the financial services ecosystem that were not being serviced by the products that were available. As of 2016, we realized that a lot of the barriers to young people beginning their financial services journey from savings or investments, right? The entry level, the barrier to entry was high, right? The minimum investment amounts, the minimum ticket sizes were beyond what entry level young people could afford. And so we built PiggyVest, piggybank.ng as it used to be called, to be literally a piggy bank, right? Like your savings box, except one that you had on your phone. And it's evolved since then into more than savings, to alternative investments, to discretionary savings. And we've added a suite of products over the past 5 years that the platform has now expanded towards 6 core features. And how have we evolved regulatory-wise? Well, to be honest, when we started, the regulation was a bit unclear, and we've spent the past 5 years kind of trying to untangle that as well, working very closely with officials of the CBN and officials of the SEC to kind of clarify, where do asset management tech or wealth management tech companies fit in? And luckily for us, we've actually made a lot of progress there. We've seen startups like Chaka go on to have the first SEC license for traders like them. We've seen CowryWise get their own SEC license. We ourselves acquired an MFP license in 2018 after our seed fundraise. So slowly but surely, I'll say there's companies like ours and other upcoming like fintech companies are finding their regulatory footing. And it's like I said, I suppose events like this one and roundtables like that, bringing all stakeholders together, that allows us to kind of figure out where do we actually fit in this financial services ecosystem. As for commercial problems that we continue to solve, PiggyVest has always been very user-focused, right? When we started with one product, helping you save daily, weekly, or monthly. And every single evolution, every single step that the product has taken has been because of where the users have directed us to. So where are we going in future? Honestly, I couldn't tell you, because it will be mostly PiggyVest users who can answer that question, right? Where is the world where is like situation taking them? Where is Nigeria's economy pushing them towards? What kind of problems do they need products like ours to solve? That's where we'll go.
Thank you very much for that, and very clear and concise. And we'll dig a bit deeper as to your expansion plans later on. It's interesting that as we spoke to the SEC today, they mentioned plans. I mean, there are regulation around robo-advisors that's been released, but they mentioned other things that will be coming to the market before the end of Q4 this year. And it'll be good to see how the market adjusts and basically moves forward, and how the competitive landscape changes.
Yeah.
I'll move on to Razaq Ahmed, who's also in the savings game, creating platforms that enable consumers save in a more efficient manner and give access to domestic mutual funds. CowryWise has done this quite innovatively thus far, and it will be interesting to understand what the next frontier is for CowryWise. APIs, for one, is something that we continue to hear more and more of, and we believe that that is a suitable way to democratize access to many of your products. How do you view this, and what are the trends from CowryWise perspective in providing financial solutions to providers as well as end users?
Yeah, thank you, Sule. It's my pleasure being here. The primary problem we're trying to solve centers around providing access, which is a main problem that's quite obvious in the market. And over the past 4 years, thereabouts, we've been able to provide that to thousands of users in Nigeria. But initially, the major problems are like two that we identified. The first being the availability of asset classes, right? Because from day one, while we understand that people needed access and they still need access to investment products, we also need to be quite sure that those investment products are quite available. So availability of investment product, the asset classes, I think is a major problem that we try to solve. So after solving that, then the next question will be, how do you connect that availability to users who actually want those products? And we've been able to bridge that gap. So what we've done so far is to leverage partnerships, right, with a couple of fund managers locally to aggregate all their mutual funds and then provide access to retail investors to be able to invest in those funds. And largely, we're actually leveraging on some mega trends to be able to do this. While we've been able to do this on a B2C level, there are trends that provide opportunity to scale exponentially. And those trends are mega trends happening not just locally, but globally. For example, mobile telephony adoption, growth, significant growth we've seen in digital product adoption generally. And this is not just related to financial services alone, but digital products generally, from mobility to telecoms to, anything that has gone digital provides an opportunity for people to experience what it is like to serve financial products digitally. So what we are leveraging on with the API is actually to leverage the superpower that this digital adoption provides to scale financial products exponentially. And what that entails is bringing in our previous experiences, partnering with fund managers to aggregate all their mutual funds, then digitize the entire experience and bundle everything into an API that allows any digital platform to be able to embed investment products and offer investment products to their customers. Because traditionally, banks will leverage branches, largely paper-based investment account creation and so on and so forth. But because of that digital adoption, there is a unique opportunity to leverage that digital space to offer investment products in a way that is completely different from how investment products have been offered in the past, but also provide efficiency and scale as key components. So that's what we're doing with the API. So overall, we're leveraging the mega trends that are happening globally and in Nigeria to aggregate key asset classes that average humans or average Nigerians can have access to, and then to use that opportunity to embed investment products in various digital platforms. We believe strongly that that is the ultimate yardstick to democratize access to investment products rather than going primarily B2C. B2C store was more or less like an opportunity to test the adoption of the product. Then distribution-wise, leveraging the API allows us to go at scale exponentially.
Thank you very much for that. And that's a theme we continue to see and hear recurrently, even from other infrastructure providers. There is a move by many players into becoming infrastructure providers themselves, just to grow volumes exponentially, and of course with that revenues. Perhaps now I move on to Tosin of Chaka. Chaka is one of the leading digital stockbrokers in Nigeria. It is the first digital broker to be licensed by the SEC, and this was pointed out on here and even in earlier sessions. Where do you see growth and the regulatory environment going forward? There have been certain announcements as of recent, and it'd be good to understand how that has worked and what the vision for the future is. I think the focus on digital stockbrokers in the past has been domestic markets, but also a big focus on foreign stocks. How has this changed thus far, especially given the sensitivities of certain agencies with regards to FX, and what is the expected focus going forward? Over to you, Tosin.
Yeah, thanks for that, Sam. So I think just to say, yeah, Chaka, what we do is we enable borderless investing for individuals to be and companies to be able to invest both in the markets locally as well as globally. And our mission and why we exist is to give the best investment opportunities, the same kind that any individual company has, say, in America, in Europe, or in Asia, to make sure that people in Nigeria and in Africa more broadly, we have the same access to the best investment opportunities everywhere, as well as, crucially, that we make investing in the local markets easier. So, let's call it the best investment opportunities as a honeypot to bring more people into the local market as well. And so far, we've seen that happen. We have over 120,000 people who signed up because of this mission, and we're very excited for where it is moving forward. From a regulation point of view, similar to what Odu mentioned, we did start in a place where we always set up to be very regulatorily conscious. We set up as if we were regulated. We set up to be transparent and auditable. And in that same regard, we partnered with regulated brokers and as well still engaged with regulators as to our status. As of about 9 months ago, we started engaging with SEC in a more accelerated fashion. And, as of a few months ago, like you rightly said, we got the first fintech license for what we do, and a newly minted license. I have no doubt there'll be more companies that will get this license as well. So it was a win because it gave clarity as to be able to offer and to be able to do what we do, the kind of agency that will oversee, as well as clarity to anybody as to the parameters in which you can operate. Now, I can't predict the regulatory future, but I can say, I think, a few things that just about just any market that's seeing innovation in the financial sector. I think there is a phase of innovation where perhaps there's less oversight, and there is a phase of regulation where it's very important to integrate and align with where the overall economy is going. I happen to believe that this is a situation that's playing out in varying degrees in other countries as well, as they're figuring out the lines between legacy and new players, where you cooperate, where you can compete, as well as what the regulator has to say about the parameters in which you can do what you do or what we do. I also can't speak to any particulars about FX and to in that degree, but I think what I can say as well is that ultimately the apex regulators for that are CBN and for investments are SEC, and super important for the scale in any of the industries in which we operate, that the structures are there and are there approved by the regulator. Otherwise, you're building on shaky ground. It's just, shall we say, physics. So we are big believers that it's really important that ground is stable, and we're very big believers that we've got to work with regulators all the time to make sure that we can ensure that they're comfortable with how we all operate, and to also make sure that we're evangelizing the possibilities, why this is so important for Nigeria. Since we started, the acceleration that we've seen in people's knowledge of the stock market, both locally and globally, has been insane, just because people can actually partake. There's a lot more education around, a lot more financial education, a lot more financial literacy, driven by some of the platforms, but also driven by individuals who have that expertise and can see people demonstrating and signaling their interest through participation. Ultimately, just like Razaq said, I think there is a long trend of more financialization in African markets, as well as more digitization. So I think the train has left the station on this one, and it's just really important that we understand that the role the regulators play to make sure that it serves the economy. And I know that that's the angle through which they're looking at it. And I think it's really important for all of us building companies that we get to understand where they're coming from and build on top of that. I'm not sure if that fully answers the question, Samuel, but I think that's probably a good place to start.
I think you have answered it aptly, and that advocacy is a benefit. The benefit of that advocacy is for the entire market, and as we try and tread through many of this, it's about creating value, and many of the regulators do understand, and the future is digital, and I think there's a very clear consciousness that digital wealth, digital asset management is one way of regulating better, but another way of pushing the markets as we move forward. Perhaps now I move on to Ibitunde Balogun of Tangerine Financial. Tangerine's business is mostly in regulated markets. Tangerine is a financial marketplace embedded in key regulated markets, including insurance, life, non-life, pensions, asset management, and most recently, digital banking on the Tangerine money. Can you walk us through the vision of Tangerine and the problems that Tangerine is looking to actively solve?
Thank you very much, Sam. So I wouldn't call us a financial marketplace. I would say we're more like a tech company, but we flipped it out in terms of how we approach the market. So you mentioned all the different industries that we play in, but we started with acquisitions of life insurance businesses, traditional businesses that have been in existence for a lot of years. We acquired general insurance businesses. We're in the process of acquiring health insurance businesses. We acquired access pension business. So we're essentially a digital financial services platform, but slightly different to all the other panelists is that we started from the more traditional business where we acquire these licenses, right? And we own our own licenses. So we're able to then now offer digital financial services, right, through the backing of our licenses. So obviously we saw the regulation aspect of it being a key place to, a key thing in all this. And we say, let's just go get these businesses so that we are licensed to operate, and, transact all these type of businesses. But like you said, we essentially are going to do everything across the financial services space. From asset management to, we're going to chop into Chaka's market, into Odun's market, and we're going to try to basically provide that platform where essentially people are going to be able to, access all these type of products, right, digitally. So, if you download our app today, you see we have the digital bank, you see we have insurance, policies, you see our pension business over there. Over the next few weeks, you're going to see more products rolling out, right? And essentially, we're looking to partner, where we don't have some of these licenses, but to be honest, we're looking to get all these licenses ourselves and to actually then be a one-stop shop where, you go in and you actually can do everything in your financial services. So to answer your question very briefly, it's just to say we want to solve all financial problems of, Africans, right? So we want to have that platform where, everything is clearly thought out, from your everyday banking needs to making sure you have insurance, to making sure you're healthy, to planning for your retirement, to buy an annuity, to invest, to save. We'll be able to provide everything for you.
Thank you very much for that, and we really like the passion and the vision for growth there. Interestingly enough, I'm sure there are certain partnerships that can be made, licenses and with and without licenses, and we look forward and we're closely watching as Tangerine proves its business model, which is already mostly proven. Perhaps we now go back to Odunayo and let's talk around the M&A fit and how you've looked at M&A thus far and what your expansions plans are. Are you looking mostly to buy or disrupt, or a combination of both? And how do you juxtapose this with your funding plans, historical as well as forward-looking? Thank you. Odunayo, you're on mute.
Sorry. Yeah. So I said historically, PiggyVest has been in the news for funding, I think once, which was in 2018 when we raised our seed round. Future funding rounds, we're still having conversations about that. It'll come, but we're a bit more agnostic about the whole, you need to aggressively fundraise for the business. I think scale back can be achieved in other ways. Right. And then as for the M&A fit, at several panels, we've kind of made it clear that PiggyVest is open to collaborations, to reasonable collaborations, I suppose. We have to put that caveat. We don't think that we can build everything by ourselves, and we're not going to try. As much as we can, we're going to work with people. Where acquisitions are possible, we're going to acquire. Where aspects of the business being merged together as possible, then we're going to merge. We're not trying to build a super app in that way, at least not at in the short to medium term. So the growth trajectory is there is certain aspects of the financial services ecosystem that we're focused on, and in those ones we will absolutely be building to kind of compete. But in other aspects, we'll be open to collaboration, to acquisitions. And we've already been in the news for one mini acquisition. And so there'll be more announcements, as we kind of alluded to when we announced that as well. I think that Nigeria's financial fintech ecosystem is very young, still very nascent. And I think that more than anything, there is still a lot of M&A plays that are yet to come. One of the things that we'll see with what we've seen with the more mature ecosystems is that it's very easy to build small silos of these products. It's very easy to build small silos of these products and kind of run in your own little corner. But if we're going to compete globally, and everyone is getting a global outlook now, we're all looking beyond Africa, beyond emerging markets to compete on the global stage, then we do need to be open to working together, because that's the only way to actually win.
Thank you very much for that. And just one final point there is, when you look at acquisitions, are you looking at talent mostly, or are you looking at the ideas and the tech behind it? Or is it a combination of both?
I think it's a bit of both. PiggyVest's founding team is, our founding team is largely made up of engineers. And what we've done very well, I think, is hiring all the really smart finance people and letting them make the decisions. So when we do hire, and then when we look at what is a complementary company, it's not just about the ideas. Is about who's currently working on it and how can they come and serve. In a lot of cases, it's usually the talent. We want these people on our team. They're already working on something smart. How can we absorb them? In some very unique cases, it's the idea. They're already working on this. We didn't get the idea first. We could build it, but to what end? And then we go ahead and propose a collaboration. So that's kind of how we see it. It's a mix and match. There isn't a science to it. I think a lot of these decisions are more like an art. And so that's how we approach it.
Thank you very much for that. And that was quite clear. We'll move on to Razaq, and the question here would be, comment on the competitive landscape of the digital asset wealth management space. What do you expect will determine success as we move forward, both in the short term as well as the medium term?
Yeah, thanks, Sam. I think the space is still at a very early stage, And I'll look at competition from the perspective of the entire space versus the traditional, rather than internal. But if you look at it internally, there are different verticals that currently exist. While to some extent, there are similarities in terms of business models, I think in the next 5 years, there will be remarkable differences in terms of how each company evolves, right? So currently, if we're to focus on the ecosystem alone, currently we have different players, doing different parts of the asset management business. Except, of course, for Tunde, right? Who wants to do everything, or who is currently doing everything. And that's fine as well with the strategy. But again, if we're to distill it into different verticals that different players, are operating in, Chaka, for example, is a broker, and they are focusing on that brokerage business. So I will assume that their business model is transaction-based. I'm assuming. I don't know what your business model is, but holistically, I'll assume that it is transaction-based. So the same thing with, say, PiggyVest. They have savings, they have investments. Ibitunde, pension, asset management. They even have a digital bank. So banking alone is a whole lot of headache, right? Asset management is a whole lot of headache. Combining that with retirement is a whole lot of headache. Brokerage is a whole lot of, is a massive space on its own. So those verticals, we are seeing different players emerging to occupy each vertical. Now, if we are to compare what all these players are doing right now relative to what the traditional players have done in the past and relative to what the economy is capable of producing or unlocking, I think the competition is what has not been covered yet, not within not among the players that currently occupy the fintech space. So overall, the determinant of success will be players who are able to combine or who are able to operate within the intersection of three major things. Regulatory compliance, largely because the space involves management of public funds as well. People's fund, not public as in government, management of people's fund. And anywhere in the world, when it comes to management of people's money, regulators are always on the lookout, primarily for the purpose of investor protection, for the purpose of building the market, for the purpose of ensuring that whatever innovation exists on a sustainable basis. So that's one key element. The second part is players that are able to identify the exact needs of the users. The important thing about user behavior in Nigeria today is that it is changing remarkably. And one thing that the traditional players are probably still trying to understand is the depth of that change, right? For example, if I'm a traditional bank and I'm developing a product, because I have branch networks, most likely an important element of that entire product flow will terminate at the branch level. But we all know right now, people don't have that patience to go to branches. But if you're a pure fintech player, when you design your products from beginning to the end, branch network as an infrastructure doesn't come into the equation at all because you've never experienced it. You don't even have the capacity to do that, or you don't even have the need to do that. So in terms of product thinking, in terms of product play, in terms of reaching out to the consumers, I think the contexts are different. So it is very important to understand that perspective. Then the third element will be companies that are able to identify the asset classes or build out those asset classes, right? And connect users to them. And that's very essential in the sense that Nigerian market has a very huge informal sector, right? The formal segment is not as huge. And if you look at the total value of asset classes we have in the country, even though we have different asset classes, right? We have equities, we have bonds, and well, let me say crypto, quote and unquote, just because it hasn't been regulatorily approved yet. But from users' point of view, users see it as an asset class, right? So the success of any player in this space will be determined by the ability of that player to operate within the intersection of these three factors. identifying the asset classes that consumers want, playing within the regulatorily defined framework, and being able to understand users' needs extremely, extremely well. So those are the factors that I think would set each player apart. But at the end of the day, competing with the market that is yet to be captured, I think is the ultimate competition. Even though, yeah, there is competition within the space as we have it, because to a large extent, we all still target the same set of users. But overall, there is a huge pie out there that needs to be bit. So for example, if you look at the retirement space in Nigeria, the pension space, for example, it's about 11, 12 trillion naira industry, for example. That's huge. And that space is primarily dominated by the traditional players. And for example, how many Nigerians are actually under that pension industry or are covered by the official pension industry? Probably around 10 million, 11 million Nigerians as well. So if you look at that, it says a lot about the potential that exists out there. So if a fintech player, for example, wants to do pension, that means, one, you have to do regulation. Two, you have to compete with the existing players that currently have about 10 trillion or 11 trillion naira. And this is huge value compared to what we all manage currently. I mean, all the players within the fintech ecosystem, asset management ecosystem, so to speak. So I think those are the major factors that I think will determine success. Regulation is very key. Understanding user behavior is very important, and identifying all the major asset classes that users can have access to, including asset classes that cut across boundaries globally, because users want that. So how do you ensure you provide access to those asset classes while being regulatorily compliant? I think any user, any company, or any player that is able to hack that successfully will have success written all over it.
Thank you very much for that comprehensive answer. And one of the key points is the pie is still big. Everything is nascent. So there's many individual races to be run, and the competition perhaps is now, but it's really around growing it and taking it from the more traditional players. The other thing that you mentioned that resonates is around user behavior and that determining what success is. And I think that's a theme that we continue to hear. Talking to Tosin or Chaka, it'd be good to understand the traction in the marketplace and what some of these customer dynamics or user behaviors you've witnessed from a digital broker's perspective, and how that has played versus your business model and market share.
Yeah, so I would echo what Razaq has said. Like, when we started Chaka, our expectations were very conservative. Even some people on this panel maybe invested in Chaka may know a little bit about it. But yeah, our expectations from the very jump were very conservative. Would people want to access this way? Do people really want to invest in the stock market? Is it too risky, et cetera? But we were governed by a thesis that just lowering barriers and making things easier, just like, just lowering the gradient of ground, water flows. We just expected more users, more people to be able to opt in if it was easier. And we were blown away in the first year by how many people and how much people participated. As I mentioned, we've got over 120,000 people who signed up, which is more than the expectation that we had, less than 2 years into the business from our initial projections. However, from getting in and looking at how widespread interest is, you talked about customer dynamics, you start to see some very interesting things. And this speaks again to what Razaq just spoke about, which is listen to what users want and making sure we're tending to those needs. We started seeing that, yes, there is this narrative, and it is true, of a generational shift where younger people who are in the workforce and are growing the workforce have different interface needs, different expectations about how to invest, both in habit and in format. And that's not going to change. So it's really a question of how quickly existing financial services map to that versus how much they service existing customers. This is not a new problem. I think there's a whole book called The Innovator's Dilemma written on this. So it's every business has this question, but in the industry that is going on. And so I would expect every month, every year, that digital will take market share away. And there has to be some kind of calculation going on in everyone's mind as to when to invest fully and when to disrupt the existing business. And I think that's going to continue. But we also saw that, besides this demographic shift, that there were people in their 30s, 40s, 50s, 60s as well on the platform. And again, this comes down to user behavior changing, more people adopting smartphones, everybody's mother here is on WhatsApp, right? So, it's not a big hop for that person to download another app and choose to invest in an asset that they can only get through that mechanism. And so, the draw may be the assets for some, a special group of assets that you want. The draw for others may just be the format. And I think this is going to be a theme we continue to see in the marketplace as people bring more innovative products to market, as well as the formats of offering these products get more and more customer-centric. Moving forward, though, I would say we're so much at the early stage of the market. We're all at the very early stage. I would expect 5-10 years from now, we're talking multiples of where we are now. And I'll say right now, I do believe we all compete more for things like investors and partners and even regulatory attention, areas where we can also collaborate, than truly for customers. I would hazard a guess that for most people, the demographics of our customer bases are probably quite intersectional, and users probably use us for different reasons. We've seen a lot of cases where users may use an existing channel for some services we offer and may use us for a different service that we offer. And so in a sense, the user is choosing how to distribute their share of wallet, choosing how to distribute services. Even if you offer more than one product, this bundle is serving different people in different ways. And I think moving forward, as we all evolve to serve our customers and whoever our main cohorts are, we'll see more differentiation naturally. I do think that's going to be a case. So I think we're more similar today than we probably will ever be as we continue to move forward. But right now, I would say, like, for us, our main focus on our customers, is on our customers and making sure that, beyond just serving the nascent new entrant to the market, the person who's just learning how to invest, that we're also not neglecting the people who have been investing for years and years, have existing habits, or are looking for an easier way. This customer typically has more capital and is typically very, very aware of the benefits of that digital investing provides. We're sometimes classed as a digital broker, and I think that's fair. But our mission is definitely about making investors smarter, helping them hit their goals, and making the friction to do that less. And so we will continue to offer products and break new ground in products that allow us to do that. And so far, our customer base has been clamoring for that. I think, again, that's a common theme we'll all see. Like, CowryWise have such a great brand, so do Tangerine, and so do PiggyVest. And I think you'll see customers buy more into the brands and the belief they have in the services that we all want to offer, that Chaka wants to offer as well, and evolve with the brand than, I think, having a more, shall we say, pick and choose or rational, I won't call it irrational, but a more dispassionate view of, like, you offer X, you offer Y, I choose X, I choose you for X, I choose you for Y. I think it's likely more an investment in the journey with the brand. And I think we all are taking customers on that journey in different ways.
Thank you very much for that, and very clear. I think a main part of what you said is digital wins. And when you look at the business of Tangerine, it's a digital platform, and that's the way it's positioned. Traditional businesses, yes, but digital platform with extreme aggression behind it. It would be good to understand, Ibitunde, how those businesses have performed thus far, what their plans are for the various businesses, as well as for international expansion. And whilst we look at international expansion, what markets excite and why?
Okay, yes. So for us, these businesses have been. So they were traditional businesses who already had customers. So our model was slightly different, where we were not starting from zero in terms of our customer base. We already had over 2 million customers right, across all the businesses that we invested in. The real problem was now trying to digitize and get more and create more value for them. So a lot of our customers, were engaging with the old companies by going to their offices and filling out forms and all that. And we said, look, you know what, we have this customer base. We want to attract and get the new customers that Razaq is talking about. But we have low-hanging fruits where we have, hundreds of thousands of customers. Let us digitize their experience and make them fall in love more with tech, right? So they can easily do they can easily buy products, they can easily buy services. So these businesses are continuing to grow because essentially we have optimized the traditional businesses. So they were growing maybe 5-10% year on year. Now that we've accelerated that to grow 20-25% year on year, and we'll continue to do that as we digitize the businesses. Obviously, we're aggressively going after the new markets, right? So I 100% agree with Razaq that the competition is not really within the space; it's really with the traditional businesses, right? And the people that are unbanked, the people that don't have access to a lot of all these services. So we're growing the business through using tech to optimize the processes and continue to then escalate. But then we're also trying to then rapidly expand. We have appetite for and you would know this, other African markets, the usual suspects, so Kenya, South Africa, Egypt. But we're also seeing a lot of activity in the Francophone, West and Central Africa, right, in the likes of Ivory Coast, Cameroon. So for us, it's about where we see we can create value, where we see we can add more fire to the Tangerine, to the Tangerine family, and we can just continue to grow. So yeah, those markets are interesting to us. Our approach is to acquire, and set up different platforms if we have to. So essentially, it's just do whatever we need to do to make it a success. The goal is to completely create digital financial services for Africa, whether it's through acquisitions, whether it's through setting up new businesses, whether it's through enabling traditional businesses. That's what we want to do. So it's we're optimizing essentially the traditional businesses that we did, making them completely digital, and then we're building and acquiring new digital customers.
Thank you, and I believe you're doing that under a single brand being Tangerine.
Correct.
Good. I think what I'll do now is ask a question around the consumer, because at the end of the day, all these services are created for the consumer. The competition for the consumer remains very fierce, whether it be, and the easiest consumers naturally are ones that already have some version of this service, which is now being optimized. So you've got competition from banks, neobanks, crypto, payments companies, mobile money, and everybody in between. And it'd be good to understand how fierce this competition is, and how do you understand what the consumer is worth? Is it the same consumers across the platforms? And what are the unit economics and the potential for scalability as we move forward? And I think I'll ask all the panelists this question, but starting with Odunayo. Thank you.
So I think that there's very fierce competition that's ongoing right now, and it's not because the competition is particularly internal. It's because whether we like it or not, we're all competing for the share of card of roughly the same pool of people. And at the moment in Nigeria, I think there's about 41 million unique BVNs, and so that's indicative of just how many people is in the larger pool. And then when you distill it, I don't think there's anybody here on our platform, on this panel right now, who's doing mobile money. So if you're doing to the banked people, to the people who interact with financial services on their phones, that number becomes a bit more narrow. So while there is still a bit more to capture outside of the people that we've already captured, there's still a bit of competition between the 4 companies that are sat here today, because outside of the products that we provide, there's several financial services products that are being provided out there, right? a lot of the reasons, because we're like really like a lot of us are focused on, I think 75% of us here are focused on Naira-based products for now. And as you can see, crypto is slowly, but almost very surely eating into the market, right? So, there's people with hundreds of thousands of users. We have like millions of users on the platform, and we want to keep that going, right? You want to keep acquiring more people, and you want to like chart a path to like 10 million. Everyone wants to get to the 10 million user mark and the 20 million user mark, but we can't not acknowledge that there is like quite a lot going on, and the fight for disposable income for the average Nigerian, which isn't a lot, is really on. And as much as it's okay to like there is a bit more to be captured out there, but as it is right now, as everyone's, you can tell from, I don't want to belabor the economic situation too much, but it's a big indicator in how people relate with financial services products, in how people relate with digital services products. And, it's shrinking just because we're going through a bit of a tough time, right? And people are, more than anything, the average user, the consumer is trying to optimize their returns. The consumer is trying to beat inflation. And so when you put all those things together as considerations, every single platform on this panel is doing their best. But we all have far more than like how many BVNs can we capture today to contend with. And thinking that way makes you realize that the share of card that we're all fighting for is a very limited pool, and the competition is very fierce.
Thank you very much for that. And perhaps I'll move to Razaq on your perspective.
Yeah, thanks, Sam. I think it's a bit difficult to assign value to a customer right now. I don't have it, frankly. I don't know if anyone on this panel has one. Please share with me. It's quite difficult, and the reason for that is because the space is still very early. We're still trying to understand user behavior, trying to understand what resonates well with the users. More and more, add more products, to add more features to the products. And because we also operate different business models, right? Some business models, they are primarily based on transactions, like, volumes. Some business models are primarily based on AUM in terms of, core asset management, and you take a fee on that. So there are different business models that we all operate. So it may be very difficult to actually assign a specific value to a customer. But an alternative approach to look at it is to look at what the purchasing power is for an average Nigerian, for example. Because when you talk about asset management, you're actually talking about people consuming and then leaving something of consumption to save and invest for the future, right? So what is the purchasing power that an average person has? How much pressure does an average person undergo in terms of their wallet, right? Economically speaking, we've not done really, really great in the past 2, 3, 4, 5 years. This is not a political discussion, but we've not done really well economically speaking. So if you look at the per capita income, the numbers are not smiling. And these are the indicators that can unlock the value that an average user has in the country. Just as a scenario, imagine if we're able to double our per capita income, or we're able to take it to about $10,000, for example. The value that will be unlocked as a whole will be much more than the sum of the individual parts. And that is the benefit that comes from the multiplier effect, right? So there is a huge opportunity, but we also need to understand the constraints that currently exist, right? While the potential is there, we also need to understand the constraints. So in terms of the unit economics, I don't know if, I think from the business side, it makes sense, right? In terms of providing access to investment opportunities at scale to people, it makes perfect sense. It makes perfect business sense. That if you're able to provide this solution at scale, you should be able to benefit from economies of scale, you should be able to beat down the cost, you should be able to be more efficient, and so on and so forth. So from that point of view, you will say that the business model should be viable in the medium to long term, right? So, but how viable that is there are so many factors that can impact that. Economic factors, FX, and so many other things. Regulatory developments, evolution of consumer behavior, deployment of technology. There are so many things that happen at global scale that impact us locally as well. Crypto, for example, to what extent will it disrupt what we have here? To what extent will people continue to adopt it? And not just in Nigeria, globally, and so on and so forth. So that's for that. Competition, well, I think, Odu is quite right with respect to the level of competition and attention that we all focus on, like probably the same space, the same set of customers. But what we also seen is that there are certain factors that intensifies competition. One is, say, for example, if it is very difficult for you to enter the market, right? If it is difficult to enter the market, then competition becomes less stringent. But right now, what will happen in the next few years in the space is a situation where it's a lot easier to enter the market. And the reason, possible scenario is that will be that it will be a lot easier to enter the market. And that is primarily because if we look at what exists within the payment space, payments, for example, unlocks a lot of opportunities, right? Innovation in payment space, in the payment ecosystem, unlocked massive opportunity for digital financial products like savings and investment to be able to, for us to build on that. And that is primarily on the back of payment infrastructure, right? Now, if we have investment infrastructure fully built out, the entire investment experience is digitized, then the infrastructure play comes to fore, which means for any player who wants to come into that space, even though there is regulatory barrier, that API infrastructure can actually serve as an abstraction of all those problems. So you don't need to face regulators because you're already using an API that is regulatory compliant. You don't need to, face product development because there is already a product that has been developed. You don't need to go through 6 months, 12 months of product testing to actually identify which product resonates well with the customers, because all these have been. So there are lessons as well that come in from the various experiences of each players that new players might not necessarily go through. So they might not pay that school fees that most of us have paid here to come into the market. But again, they will have to contend with the size of the existing players as well. So I think overall, it's a balanced game. Competition will still be there overall, but there are certain things that new players will find extremely easy to do. But there are certain things they might find difficult to do because existing players have already, scaled that hurdle overall. And in terms of the value of the users, as I mentioned earlier, overall, I think we should just try to be extremely hopeful that the purchasing power of an average Nigerian swells over time. Because even though the expectation is that will happen, it's just a matter of when, frankly. With the right policy in place, the right support for the government, the right regulatory developments, and the right understanding among all the stakeholders, I think that value can be unlocked massively. And by then, we just be sharing the pie, I think, rather than competing for a very smaller one.
Thank you very much for that. I think what you're saying is something that resonates across all markets, as well as all industries. A rising tide lifts all boats. But the one thing I've gotten so far is digital wins, and the fact that from a macro level, it's a youthful population. As that youthful population goes into, starts to work and goes into the economy, what they are used to is what they will continue to utilize. And that basically points to digital once again. Perhaps I then hand over to Tosin to give his perspective on those questions.
Yeah, I think really great points by both Odu and Razaq regarding just share of wallets. It's a reality. But I think not all wallets are equal, and I think that's perhaps not maybe a hidden truth behind making all our services work, because I think everybody here is committed to financial inclusion. For example, on Chaka, somebody with 2,000 Naira can open an account and start trading, buying GT Bank or buying MTN and or otherwise. But it's quite clear that somebody as well with 2 million Naira or 20 million Naira can do the same. And so in a sense, the distribution of customers and their value of their wallet, which is a different thing about the value, I think is a different question about access. I think those are two orthogonal things that, yes, we still are all subject to given the macroeconomic factors, but I think we shouldn't underestimate the degree, again, looking at disruption angle to which everyone here could be serving both a high access group, but also competing and serving better, people with higher wallet sizes who may be with traditional players. And I think that's a trend that we'll also see pick up. I think something that's also not to be underestimated that is a barrier here is even that share of wallet that we're all competing for, how fast it's growing despite the overall wallet size, wherever that is. And I think those are linked a lot to trust and education. With a lot of what we do, all of us on here, it's similar to health in that if you know it, like truly know it, and you trust who's gonna do it for you, you almost definitely will. It's just good for you and it will help you achieve your goals versus a discretionary thing that you've got to buy into or you've got to be convinced of, like say buying, a certain product or certain brand. Financial services, just like health services, are meant to be objectively better for you. But the things that get in the way are trust and education. And I think cumulatively, we're all building that up. So I would also expect that just as a percentage of total wallet, that we would see how much people are investing or saving. I think we would see that go up as well. So I still think there is a secular trend of digital eating more share, more trust, more education in the market, growing share, and probably all digital services serving as well higher value customers over time, just given as our service capabilities continue to expand, and maybe there might be some natural advantages from having large groups or large access of retail customers. I do think that you'll see the ability to serve higher value customers, higher wallet sizes continue to go up. So I agree with all the points re competition, but I do think the pie will expand even in a market where overall investments may not be expanding, or in a market where the economic situation may not be trending in the best fashion. I think digital will continue to grow because of these factors.
Thank you very much for that. I think last but not least, Ibitunde, and what I did hear from Chaka is that not all wallets are equal. There is still value to be made. However, perhaps all wallets are up for grabs. So Ibitunde, it would be good to get your perspective on this.
Yeah, definitely all wallets are up for grabs. I think for us, like Razaq and everybody else has said, you can't really put a number, try to ascertain the customer value. But what we try to do at Tangerine is essentially be with you from the beginning to the end, right? And I think a missing key in a lot of conversations around finance in Africa is the insurance element, where you have people who have all their savings wiped out because of an incident. So a family member is sick, or there's an accident or something happens, right? And there's this whole share of wallet, then I have to go and break my safe lock, right, with PiggyVest because something has happened, right? So I think for us, we try to look at the customer holistically, because we can offer you either, if in retirement, whether you want annuities or pensions, program withdrawal, or through the course of your life, education policies, life insurance, health insurance, you want to travel insurance, you buy a new house, a car, and obviously all your payments and stuff. So, I think with product evolution, we'll try to capture more share of the wallet, obviously trying to be there at every step of the way. So we are designing our product in a way that, you can actually use that product all the way from probably, 13, 14, if your parents can open you a junior account, till 60, 70, and there are so many different products. Obviously, the total economic system, the total economic environment that we're in, is going to hamper the disposable income. But I think that's going to grow over time, as people get more sophisticated. You would see that people can actually get more for the amount that they have, right? They can actually know when to invest, when to buy Tesla, or when to buy MTN and know the returns that you're going to get, and when to do insurance. So yes, even if you don't have that much, making sure that you buy the right products that would help you navigate, different circumstances. So I think, product innovation will play a role in that, you're being able to capture more value from the customer and also build financial freedom for the customer. So that's what I think about that.
Thank you very much for that. And I think this essentially wraps up this panel discussion on digital asset and wealth. Gentlemen and ladies, you have heard from the foremost entities in this space, trying to create value for consumers, trying to make sure they have a very smooth and efficient experience as they create wealth for themselves, and as well as their various families and society. And we're very keen to continue to hear from you. Many of these entities are very open and have presences online, and thus I'm sure you can download all of the apps, test them yourselves, and share your feedback as we move forward. Thank you again to our panelists, and thank you to the audience.